Microsoft is one of the largest companies in the world. For companies of this size, it can become very hard to grow even further. However, Microsoft has a potential lookout with their cloud and AI business that we want to examine in this video today. We're going to look at two cases, one bull and one bear case, where we're going to make some assumption based on how we view these AI outlooks and whether or not buying the stock at today's price could make sense. First off, let's look at their last year's data. They made a revenue of around $280 billion last year with a net income of around $100 billion, which gives them a very solid profit margin of around 36%. They're currently priced at around $480, which gives them a PE of almost 35. Now let's look at the bear case. Assuming for the next 5 years that the AI growth might decline a little bit, that demand goes back and so on, which I would give a revenue growth of still 8% because their cloud business still has a lot of backlogs, still a lot of operations going on there. So even though 8% might not sound that much, for a company of this size, that is still good growth. That would still almost give them a 50% increase in revenue over the next 5 years. But I would assume that the profit margin maybe goes down a bit, that they are overspending on AI in these next 5 years in the bear case, which presses down the margin a bit, and a share dilution of 0%, the stock count staying flat. They haven't done much with the stock buybacks in the last couple of years, so I'm not going to assume that in a bear case that anything much would change there. For a PE, I would still give them a very solid PE of 22. Even if the AI race declines and so on, they are still a great company with a great balance sheet, and they can still grow their cloud infrastructure, for example. So a PE of 22 might even still be a bit low for such a good company, even on a bad AI case. So let's look at the results for this bear case. That would take the stock price to around $390, which if you buy at today's price, would mean that you get an annualized return of almost negative 4% over the next 5 years. Now let's look in contrast to that to the bull case. For the bull case, I've went with a revenue growth of 14%. Now, for such a large company, 14% over the next 5 years would mean that they would almost double their revenue. So basically, they have their whole already huge company structure, and then all of these AI infrastructure and demands could even double their revenue on top of that. So that is a big bet, to say the least. And of course, their profit margin may be even increasing a little bit due to such high demands, and maybe even a little bit of share buybacks, even though their shares are quite expensive right now, at least in relative to their PE. And I would assume at least a PE of 30. You know what, for such a huge growth, I think I'm going even higher. Let's go with a PE of 32. 30% revenue growth for such a large company would still be more than valid enough to pay a very big premium for it. So for this bull case, let's look at the results. That would take the stock price to around $933. And if you buy today's price, it would give you a very solid return of 14.25%. Now, if we combine these bull and bear cases, we get an average stock price of around $662, which would give you around a 6.69% annualized return. So looking at these two cases, it's a bit difficult to justify buying Microsoft at this price, because the bull case has a lot of potential going up. They essentially have to double their already huge revenue in the next 5 years in order to get a solid year-over-year return. So buying at this price could be a bit dangerous because the downside is very high. The potential AI race slowdown is a very real risk. Potential that I cannot turn it into much profit and so on. So I personally will stay away from this company a bit and maybe wait for a lower price, a lower starting entry to get a higher margin of safety. But I'm definitely keeping an eye on this company because, again, it is one of the largest companies, one of the best companies. But let me know what you guys think down in the comments. And thank you for watching. See you in the next one. Bye.